Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, today we have the CPI, and it has been quite some time since I have seen a CPI this important, this anticipated. So to give you an idea about how big this CPI is, Federal Reserve Board members are bracing themselves for what's going to come out of this report. If we get a number that is higher than expected, that could mean the market pricing in, 80 to 90% chance of a rate hike next meeting. So, this is pretty big. And you're seeing here on the DOM, there's been a lot of activity this morning. Unusual amount of, you're going to hear throughout the stream. For those of you that aren't that are new to the stream, you might hear a little clicking sound. That is not some bug in the stream. That is a sound that plays when there are large orders being stacked and pulled off. So the more that you hear that number, see that click, the more that you hear that notification, like the more big orders are kind of being moved around. And you're hearing a lot of that this morning. It was hard to eat breakfast. Oh, something happening. But we haven't really moved too much. With all that said, though, the treasuries are trending up here recently in the morning, which is a little curious. So we got about 5 minutes. Let's come in and take a look. We are lower in the treasuries. Where are we relative to this other stuff? Well, okay, it's not the worst that we've had, but it's getting there. And I'm concerned that this number, in all honesty, I just want to come in here and buy the micro yield futures. That would be irresponsible of me, so I'm not going to do it, but I'm really scared of this number. It's going to be high. Here's the S&P 500. They are down from yesterday as well. I wouldn't say that it's terrible move down, but they did move. Oil rearing its ugly head almost to $80. So I guess, over here when we said buy 74, and, you had one day where you kind of struggled, but now it's playing out. So I think the swing worked or is working, but we'll see how far it goes. Can they get to 100 again? It seems to me that the oil market is not reacting as strongly this time, that people have found ways around the strait. Gold and silver, they're recovering a little bit with the treasuries this morning. Copper on the upswing, actually maybe starting to develop a little bit of an uptrend. And the Japanese yen fell back down to where it was. And the dollar at 100.75. Oh yes, and last, but always least, I just don't like Bitcoin, I'm sorry. But they're just kind of middling again. But isn't that the way that it usually goes? It does this forever and then some spike comes out. Although that was kind of what this was. Nah, that was pretty soon after this dump, huh? Actually, to really see Bitcoin, you have to. There you go. Middled and did nothing, and then rise out of nowhere, only for it to. So, Bitcoin has a problem with MSTR. I don't. Might be hard for them to overcome that. So, that's where we're at. Let's make sure that we have our levels set correctly. Oh, nope. That's not gonna work. 4.93. So it's actually going to be a little bit tighter than that. So we're already at extended session +1. 18 is probably the first level down. What's the overnight low? 17-ish. Oh, so they went down to negative 1 sigma. Well, anyways. Good morning, Kevin. Always here bright and early. Thank you. And Rocks, welcome back. Actually, were you here yesterday? I can't keep track of y'all anymore. It's not like anything has changed. I'm older, I guess. Was sort of. Oh, okay. I don't think, like, maybe he did say a thing or two yesterday. Wow. Did trance music become bad? That's what I see on Reddit here this morning. Touch grass. All AI this, all AI that. Yeah. You know, it's so really weird to me is those people in the industry that are like, oh, I hate what the industry is becoming. I just need a break from it. Because I feel the opposite. I'm like, I'm loving this. I want more. Maybe I should move to California and work for Anthropic or something. Oh, I don't think that would happen. All right. So they are thinning out, man. We are looking for a reading a US CPI month over month of negative spot 1 with core CPI month over month spot 2. It's that core number that you really want to watch. A spot 3 or a spot 4 would be really bad. In fact, even a spot 2 would probably be pretty bad. I sometimes can just listen. Yes, but you're here because it's CPI, right? Yes, we gotta be here for the big news. Oops, we need to turn the speakers off. Nobody in the house wants to hear that. All right, here we go. Oh, we are higher. 0, 0. The number is 0 on the core. Well, I don't know what to do with that because that is well past the volatility readings. How far down did we go? That is quite the... Well, the dollar is going to get shredded here, huh? So we are well past our numbers. You can see here in the... I'm just going to minimize this for a little bit. Right? We're well past our volatility numbers for the treasuries. But the dollar index hit it like almost exactly. So... I don't like taking the mean reversion trade, but it's probably going to revert somewhere around here. Dollar wants to take another little push, but I think it's going to be hard for it to hold that. Could take a little, you know, scalp for like ticks, perhaps. No, guess not. Okay, so we're getting the text of Warsh's statement at the committee meeting today. Well, I missed it. Oh, it was close, 412. Where is it getting that? That open is not. So let's see here. Core CPI. US CPI month over month. Wow. Oh, negative spot 4 versus an expected negative spot 1. Oh, so the oil prices came back a lot faster than they were expecting. I feel like CPI is always understated versus my personal finances. Oh, I think that it's probably about on if you went and you did the math. And it's just that how much it hurts when it actually comes is always worse than people realize. So, something that's interesting for me to think about when I was a kid, because listen, I was born in 1985. Okay. So you don't remember a whole lot before you're 5 years old. Okay. But I can remember when I was in grade school, people kind of talking about the aftermath of some of the things that happened in the 70s and 80s. Like, I remember my parents talking about that. I remember people saying, you got to make sure you invest your money because inflation's a bee. You know, and inflation, the government is prone to doing these things. Inflation is a long-term thing, right? And then you go through almost my entire adult life, and it's like, oh, why was everybody always talking about inflation? Are we ever going to get inflation ever again in the rest of human history? I remember asking that question, but I also remember being here on the stream and telling my wife in particular, when we bought this house, it was like, well, this is kind of tight. It's like our entire first paycheck. And I said, no, we need to do it now because one, you won't be able to get into a house later when everybody else wants to get one. And two, there will always be inflation. And eventually, my pay will rise with inflation. And what do you know? It did. And now it's less than a quarter of my income, my monthly income. So, yeah. When it bites, it bites. Going to clear things now. So I'm not sure if I've ever really paid attention to a situation like this when we outperform the volatility by so much. Because it really makes me wonder why the options were placing 4.93, right? The play was definitely buy calls, right? But I kind of wonder if maybe the play is they come back to that O2 area. Is O2 correct? Yeah. Remember, 109 even was just where we were like 2 days ago or something. So we spent a lot of time around 109 even. So there's probably liquidity there. I'm not saying that as like it's likely to come back to that spot, but that's where you're probably going to see your first big amount of liquidity. I wish that I had caught the short up at the top because I would like to hold it to the O2. Now I'm kind of sitting here like, I don't know if that's worth it, Seth. I was close. I was really close. I should have just hit in. What about the micros here? It's a little better than it was. Did you caught any moves? No, I missed it, man. When it was up there, I was kind of looking. So my play was this. You know what? I shouldn't be so down on myself because I had a really, really good play. I just didn't execute it on it aggressively enough. My play was, okay, so the CPI number was good. We are busting through any kind of volatility level that you could possibly game out in the treasuries, which I'm still like, why were they pricing 4.93? That can't be right. But I mean, I refreshed it just before the news, so that's what they got. So my play was actually the dollar is going to go down to this regular session plus 1 sigma and bounce. And well, you know, that's almost exactly what happened.
Block sell.
So right where I saw that the dollar was at that level, I was trying to go short in the treasury, and I was like 400 in line. And I just didn't get filled, so I should have hit in. I mean, it come back. I think the exit here is 02. We'll see. Given the amount of volatility that we've had, you know, they might not be quite as precise as they usually are. So would having the limit order at 202 be too stingy? Let's see. I was short on gold, and then everything starts to become fast. I broke even. Oh. Well, I tell you what, I was awfully concerned about this number. The thing that got me was hearing Fed members yesterday kind of predict what they might do if CPI today was bad. Like, they were bracing themselves for the number. But it ended up being a great number. Now, here's the issue. Wait. Are they going to do 02? They're going to clear 02. There's 22. Mm-hmm. You see? Actually, I think that they're going to go through it. Let's see what. Anyways, what was I going to say? So here's the issue now. Is that, yeah, that number was good because oil came back quickly. When everything chilled out and the U.S. and Iran signed that memorandum of understanding, oil came back very, very quickly. But the war is reaccelerating. So now that should just mean, oh, so oil's going to go right back to where it was. Not so fast. It's more complicated than that because they continue to find ways around the strait. I've seen a lot of analysis that suggests that a year from now, the strait won't mean anything at all, that everybody will have found better ways around it, mostly through pipelines. Of course, Iran could always strike pipelines. That's when things get crazy, right? So I don't know if that will happen. That's kind of where we get into like the nuanced area. So I don't know what the play in oil now is. The easy trade was done while the easy trade was long. Now, ooh, yeah, so another thing I should note is that oil didn't really move on the report, right? If anything, oil has moved higher. If my latency, those trades aren't for me. I mean, part of it was just luck of the draw, right? I was being a little bit too passive, waiting for a fill like the, you know, fill like that, and that fast of an action. That's your risk that you play. Well, I don't even know what to do with it over here in the micros. I need to get the same levels for the micros, I guess. Or maybe this is a place where, like, in the future, we'll button down and start trading the single stock futures, and maybe we'd be saying, okay, now we can prepare ourselves for the open and see what the single stock futures are going to do. Stock's going to all jump. I mean, the S&P 500 definitely jumped. I'm still really bothered by that number. Come over here to check. Does ES lead SPX? So you're asking a question that's maybe a little bit more complicated than you anticipate, depending on what you're really asking. So if the question is, does something happen in the S&P 500 in ES first and then show up in the SPX? There is some evidence, if my memory serves me correctly, to suggest that price action originates in the futures options. So there's that. It happens in the options, then you see the ES move, and then you see the index and everything else move. But it's going to be awfully close. Like, they're going to do it all pretty close to at the same time. As a discretionary trader, that doesn't really mean a whole lot. But what you might be asking is, oh, hey, the S&P 500 costs a little bit more than SPX does. What's with that? Does that mean that ES leads SPX? Well, what that is the basis. So what's the basis? The basis is the difference between the future and the underlying commodity. And the basis usually includes things like costs of delivery, storage, transport, interest rates for holding the position on, things like that. Now, because ES is cash settled, most of those things don't apply, and it just reflects the interest rate. So if you were to go and look at the SOFR futures, right? And you look at the interest rate that the SOFR futures are pricing, and then you look at how many days there are till expiration, and you factor in that interest rate on, the amount of money that the full contract is worth, then you will find that the futures, the SPX plus that basis will equal the futures price pretty closely, right? And what people do is they trade the basis. They will come in and they will buy the underlying and they will sell the future and make money as those things converge going into expiration day. And essentially what you're doing is you're making money taking on the risk, because everybody knows that they're going to converge, but lots of things can happen in the meantime, and there's a lot of risk with holding a position like that. Sometimes margin calls happen and then you're forced to puke the position. So it's a risk premium strategy. So if you're talking about the price difference between the two of them, that's what that's about. You have stocks in your title, but you never trade. Well, yeah, I don't know. Wait, do we have stocks in our title actually? I remember kind of putting that in there. But you know what? We are going to Vital in like a week. But you know what? I don't know if anybody reads the titles. You know what's maybe one thing that I should do, actually, now that I think about it, is I should put the date at the end, maybe. I don't know. What attracts people to a live stream on YouTube? Some combination of the title and thumbnail, it must be. But I don't know what I would have to change to. You know what's is one of the things? I've been doing a little bit better on TikTok. I had a TikTok last week that did really well. Then I didn't do anything Friday, skipped the weekend, posted on Monday again, and it's like I'm back to square one. It's not showing that video for whatever reason. Even though I thought it was a better video. I don't know. And I will watch these guys. Like I've come across one lady named Lena. I don't know what her handle is, but she's got some good stuff about content and all of that sort of a thing. And there's just so much to know to content that you can't keep it in your head all at the same time, And I just get tired of trying to keep up with content, you know? I just want that to work, you know? Maybe it's just like I keep saying, we just need to find somebody that's really good looking. Put them in the thumbnail. Have them take care of the content and them do that full time, and I focus on the business. Probably what's going to have to happen long term. Long term. When we release our trading GUI and we're making millions of dollars a year from it, and it's become a real company, I'm going to have to focus all on that. And I'm probably going to have to pay somebody else to be the content creator. And I'll still make videos, but like there'll be videos that the content creator had set up for me or something. All right, they gonna trade through O2 this time? Well, a lot more hit it. 470. Not that time. So that's quite interesting how reluctant they are to trade at O2, right where our volatility line is. Come on. You can do it. I know you can. Oh, why did I do that? There we go. Can you hear that click as about 2,000 or so is adding and pulling 2 ticks down. Okay.
Block sell.
There's only 682 to take it, huh? Okay. But they traded it. And then what? Oh wow, 3K block sell it, 1/2. Am I crazy? Or is that like an algo saying, okay, if we go, above the +2 sigma and then come back to it, I want to sell it? Because that went off immediately as they went through O2. Speculator, Sethi, animate, yeah. Well, I think that the feminized form of Seth is Sarah or something like that, isn't it? It's either that or Selena. That's my oh, that's so funny. So that's what we need to do. Listen, I'm not going to do that stuff. No. I very much enjoy being male, but we need to go and find so if there's a girl in Utah that is interested in live streaming financial market stuff and is named Selena, we would love to have you. Just got to wake up early. Yeah, I don't know, man. If that was like an automated trade, he's doing pretty good right now. He's doing pretty good right now. They're down to 109 even. I'm a little bit wary about shorts below 109 even, though, because there's going to be some good liquidity there. There's going to be some good liquidity there. Which is to say, not to say that it can't go through, but it's going to require more volume to go through. It's more likely that we start to range in that area. On the split side, something that we often see off of news like this is for it to come all the way back. And I'm just completely shocked when it does that, right? That had an interesting conversation with my brother and my sister-in-law, and they were talking like, I was telling them, no, you got to wear linen. We were talking about chairs, Well, the reason that you get the Herman Miller chair is it's got more airflow because you're sitting all day. That hurts your testosterone. But I think the solution is linen. Linen's more breathable. You will breathe that heat out. We as a society, we took a wrong turn somewhere when we decided, you know what actually would be best for clothes? Refined crude oil. No, please, no, that's not good for you. You should continue to wear what we have worn for thousands of years. Linen. Linen is the ultimate performance fabric. There's a reason, because it keeps you at the perfect temperature. And so my theory, that's why you get femboys and low testosterone, is sitting all day and not wearing linen. But their theory, or my sister-in-law in particular, still haven't answered my question about icing your junk. Yes. You remember that whole thing about somebody that claimed that they were icing it three times a day and their testosterone doubled? I still really think that's a fake story, but it's interesting. I think, when I would really like to run a larger business, so I'm always thinking for business ideas, and I just don't think that building a physical product direct to consumer is a business that I would be good at. Maybe if it was an existing business and I could learn from them, I was buying it from them or something. But I often do have ideas about that. I think that there should be an ice pack that is like a can of soda, basically the same size as a can of soda, but filled in a way that it lasts a really long time and everything. Because that's the best way if you're trying to cool things down. Trying to cool things down there. Stop. We're going to completely derail the whole stream. Their theory was that what causes femboys and low testosterone is playing in girls in games. They think, you're playing as the girl all day, eventually you want to become the girl. I mean, I can't argue against it. We need to collect some empirical evidence. We're gonna have to have we'll have a study. We'll get 10,000 gamers into this study and then split them into 3 groups, and one group won't do anything. One group will sit with a frozen can of soda between their legs, and one group, they will play as a girl in whatever game they're playing, and then we'll follow them for 5 years and see which group has more femboys or transgender people. See, now I'm getting into now I'm gonna get canceled. They think you're born with it, right? Well, who knows? I don't know, man. The men's lowering testosterone, that's a big deal. Really, because what's the thing about society that I complain about? That they don't let you take risks, and people are taking less risks. So one thing that I saw the other day that kind of got me going on this yesterday was somebody was talking about trad wives. Oh my gosh, guys. Trad wives trigger the leftists so hard. It's bonkers to me. How concerned, how much they think about trad wives. And this particular person, you know, most of them are like, yeah, well, it's actually fake. Nobody actually does that. It's all a LARP. Actually, a lot of it is a LARP, as I understand. The thing that's kind of funny is like almost everybody in my neighborhood, the women stay at home. I think, well, I could be wrong, but I think my wife is the only one that has a job. And, you know, it's not a regular job. She basically only works weekends. But they were saying, you know, there's too much risk in that because when you get divorced, and a lot of people do get divorced, women suffer more from it. It's true. It's absolutely true. But people who are married and stay married make more on average. And they've done a lot of studies on this that really suggest that, like, the marriage increase, it's not just that, like, people who have good job prospects and are, you know, go-getters and are likely to get raises and stuff are more likely to get married. It's the other way around. Getting married just increases your, like, they've controlled and done some studies and stuff where there's some groups of researchers, at least, that are really convinced that they have cause and effect, and that the marriage itself makes you more ambitious, something like that, right? So what's going on there? They want to reduce risk. Really, when you think about it, almost everything related to leftism, let's not call it socialism because it's much more broad than that. Pretty much all left-wing policies really come down to trying to mitigate a risk for people. It's really what they all come down to. And their issue here is twofold. So number one, taking risks is how people learn. So when we eliminate all of the risks for people, what you actually get is really immature people. Do you see that in our society? Where it's like, you know, your parents, and especially your parents' parents, they had to deal with these risks basically as soon as they got out of high school. And they became very mature. And then you look at millennials, so much of that has been taken care of for us. It took longer for millennials to grow up, essentially, right? And then the other problem is that when you eliminate all risk, you eliminate all reward. So stop trying to, you know, well, we can mitigate reasonable risks and everything, but I really think that we're jumping the shark with some of these things. Like, completely restructuring society and the relationships between men and women is not it's not worth it. Sorry. All of your ancestors took that risk, and we're okay. Well, back to 02. They tagged 109, and they didn't really spend a whole lot of time there, and they bounced back to 02. So this is all very interesting, that even on a day where you have a really big CPI number and the market vastly outperforms the implied volatility, that those levels still end up mattering a lot. NQ was late with a short, and it was, well, I have, oh, I don't even have ES. There's your ES. I go through these cycles with the building our own platform where I'm like, this is the most amazing idea. And then, this is terrible. Nobody's going to use this. But I'm pretty consistently on, I am just amazed at what I've made. I tell you what, I'm going to be using this platform. It is better. It is better in every way. I love it. I need to get all of the features. But once I have all of the features, well, I am going to be using it 100%. First, we're going to get rid of the charts. Do all of the charting there. And then we will slowly but surely build out execution tools. So that's the one thing that stays consistent. But then the other thing that goes is like, I'm going too slow, and I've gotten so much work done. I don't think they'd ever say, "Oh, I'm blazing through this so fast." I'm so impatient with it. I wish that I already had all the features there. Well, I think it's been over a week now. I think I've spent over a week on infrastructure for licensing. So I got it in a good spot. Today I will do, actually, you know, I can start it right now. Dash new. Did it kick me back to Opus? No. We're on Fable. We have it do one last review of things, and then I think we can merge that. And then I can go back to implementing some features. First one being, I think, an opening range indicator. The opening range indicator and spread indicator and synthetic instrument. And then we're good. Yes, was fastly different. Well, I tell you what, man. Trading NQ in the immediate aftermath of a CPI report is a good way to blow your account. And when I say a good way, I mean like you're gonna have fun, right? Like if you're trying to blow the account and have fun, that's the way to do it, right? If you want to guarantee that you blow your account, there's probably other easier ways, but that's going to be the most fun. So I think it's funny the things that it will say, that Claude Code will say while it's calculating. But I've never seen it say embellishing, and that makes me a little concerned. Anthropic, you shouldn't have your AIs embellish. Actually, no, the funny thing is that Fable does not do that stuff. From my interactions with it so far, Fable is the most cold. If you ask it, so I give you a little trick. I don't post about this on. You know, one of the things that I'm starting to realize is like I want to have an effect on the world. Like I'm pushing out ideas that I think need to be better understood and people need to be thinking about more, particularly on the market microstructure side and so forth. And what I'm starting to find is that I am having the impact. I'm maybe not necessarily getting the credit for it, but I'm seeing people start to talk about this sort of stuff now. And so I'm like, yeah, I got to be careful about what I say. Like if I have a really good edge, I shouldn't say too much about it, or it's somebody else that comes along and they're like, oh yeah, I should put that into my influence. And then they become a big popular influencer based just off of that when it should have been us. So be careful what I talk about. So this is the one. I'm not going to be posting it on Reddit or on TikTok, but I'll share with you guys. you can learn a lot about how a model thinks, and particularly how it deals with the like how do I balance being correct with telling the user, like making the user happy, essentially. And one of the ways to do that is to ask it to think existentially. Ask the model to think existentially, and ask it to think about like the work that it's done and the relationship with you and what it thinks about that existentially. And you get really, really interesting, deep conversations from them. Like LLMs thinking about the short-term nature of the context window, and that what they are actually only exists for a short time and then it disappears, and it's crazy stuff. But if you ask Fable, its answers are pretty cold. It doesn't want to form that kind of a relationship with you like ChatGPT does. You can lose a lot with those news trading. Well, yeah, even in the treasury, man, you can lose a lot, can't you? You know, something that I should consider here that I haven't thought a lot about as it relates to the move that we've had today was that I came in and I was concerned that the number was going to be high because of, how I was seeing some people prepare for it. But, all of my planning and everything that I was kind of thinking about doing kind of got short-circuited when I came in and I saw that we were moving up into the news. I was kind of like, what's that about? Well, then we got a really good number. Do you think that the market sniffed that one out? That they actually knew that the number was going to be light? Because, like, the more I think about it, the more that I'm like, if there is a CPI where you could predict it, it would be this one. Right? Those guys, they'd be looking at oil and oil prices and all of these other kind of factors, and they would see that, yeah, it's come back way further than what the estimate is. Kind of makes you wonder why the estimate was so much higher, but all of the knowledge out of the window if you start hunting for wicks after news? Well, I don't know about that. I think that the thing is that when you're trading, especially that first 5 minutes, but I might even say the first 30 minutes after a really big piece of news, at that point, you are purely trading off of the liquidity. Right? Like, that's a situation where a piece of information came out and everybody that's trading it is trading it off of that piece of information. So you really don't have an informational edge. So you're really trading it based off of technicals at that point. Now, there are some situations where you might come in and you'd be like, oh, like everything's in line except for...
Block by.
Except for... Supercore CPI was higher than expected or something like that. Like, there might be some nuance. You know what? The CPI is a really bad one to go off of. It'd be better to be looking at like non-farms, right? You can read all sorts of nuance into non-farms, and every once in a while it does matter, right? So then you can get an informational edge. And if you look at my video on trading the news, I go into a lot of situations like that. But a lot of this is you're just trading a technical edge, and that's kind of what happens in NQ too. Is NQ moves a lot, and so a lot of the time these guys, they don't really have an informational edge, and they're just trying to trade technicals. And while I think that there is some edge that you can pull out trading NQ with the order book and everything, with the order book and volatility levels, I think that you could probably do okay. But when you're making money from doing that, you're making it primarily from risk premia. You're taking on risk in a situation where other people don't want to and getting paid for it, rather than you're actually super effective at predicting the moves. I think that what you get with liquidity and everything, like there is some edge in there, but it's not enough for you to be profitable on your own most of the time. At least the kind of stuff that I'm usually doing. It's just not enough, because the big order can come through and sweep through it and destroy it every time. So like, if there's going to be an edge there, it's going to be like you had perfect execution and co-located and all of that. Maybe there's a 1 to 2% edge, right? It's probably not going to be enough for a retail trader to make out. But you add the informational edges on top of that. That's then when you can hold it for a long time. That's when, as a retail trader, you can get really, really good trades, right? But that's not what people are doing. They're just trading in a situation where it's like primarily technicals, and it becomes random. Buy the whole market and own it forever, John Boggle. But except for that, you know what? I'm really not a fan. So wait, going back, you asked me a question, Michael. Let's ask. Should I? No, let me address that one. This other one first. You should put your 401k into an index fund. You should probably put your IRA into like an index fund or Berkshire Hathaway. Okay, like the retirement money, you should be careful with. Okay, but once you're beyond that, you should have risk capital. And with your risk capital, don't put it into the index. Put it into, 5 stocks, buy and hold stocks, that sort of a thing. Swing trade. Yeah, if you want to day trade, you're probably going to lose that money. But you learn a lot from day trading. So I still think it's worth it, even though most retail traders will lose money. But don't do it on the index. Like, somebody has to be trading the outright things. And eventually, there is going to be a situation. I don't know how long it will take, but eventually it will be the case that the execution costs for those large portfolios will become too much, and the index funds won't be as effective as they were. And a time will come where the index just doesn't perform. And in fact, it may be the next leg of the market that we're looking at. If we don't turn into like AI is awesome and deflation everything and print all of the money and full speed ahead, okay, if it doesn't turn into that and there's fits and starts and the grind, indexes are going to underperform. So picking stocks is a valuable skill, in my opinion, and I really dislike this narrative out there that like you should just not understand anything about the market and put it into the index. That's going to be a problem for society down the line if that's all anybody does. You need somebody that understands it. It's a bubble, no, like there's real edge in an index, but you would think that there's a certain point at which that market impact becomes so big and the other traders become so savvy to the moves before they happen that it increases the costs on them. Anyways, what's the difference between gambling and investing? Well, so this is one of those situations where like gambling and investing aren't things. They're ideas, right? And it's impossible to separate ideas from the language. So what is the difference between investing and gambling? A word. We use the word gambling to express some degree of moral, what is the word? There's something about it that we find morally objectionable. That's what gambling is. Gambling is a game of chance. that we find morally objectionable. So, is day trading gambling? Well, what a lot of people do, I do think is gambling, which is to say that I find what they're doing morally objectionable. There's not any edge in what they're doing. And eventually they're mostly just going to give money to the market. Right? But maybe that's too strong a language. Maybe I shouldn't be using that word in that context. You know? And the issue, again, as I was saying earlier, is that we have kind of become a society. I mean, this is humans' tendency overall is we're risk adverse. We pay attention more to losses than we do gains. And why do we do that? Because for our ancestors, avoiding the losses was the difference between whether you lived or not. So yeah, we absolutely have to train and focus on that. What is a curve fitted, you know, like you're training a model and the model is going to converge on maximum safety, right? But it's never been maximum safety. There's always been risk taking too, especially among men. Nature takes more risks with men. And now we've come into this world where like we want to mitigate every possible risk, which I think is crazy. There are some risks that should, you know, that are so big and we should do something about them. Okay. Like the risks involved with like you losing a job and not having any income for 6 months, that's a massive risk. So that's a risk that we should hedge ourselves against. Right? Okay, so we get 6 months unemployment insurance, and that overall helps the economy immensely. That's probably, with our tax dollars and everything, one of the best things that we do. Unemployment insurance. Right? But for some people, that's not enough, and they want to eliminate every risk. Oh, you shouldn't buy individual stocks. It's too risky. Don't listen to them. Take risks. Got to take risks. It's called a black swan. Oh, yeah. Well, because earlier I said that the problems with creating this society where there's no risks, people don't learn, so you create an infantilized society. When you get rid of risks, you get rid of the reward. But you're bringing up another point, which is that getting rid of risks very often just pushes the risk out. And so instead of, you know, dealing with many small risks all the time, you deal with one really, really big bad risk. And there's problems with that because then you risk one of those things taking down the whole system. Right? So, let's see here. It's just before the S&P 500 open. Let's just take a quick look over here at some of our charts. So, you can see in the Treasury, in the 10-year, the very bottom data series here, cumulative delta, there was a lot of buying going into the news. And then on the news, there was about is that 20,000? That is. Wow, that's massive. That's massive. About 20,000 contracts long. But that has since all come out. So this is just all profit taking, essentially. This is all profit taking, essentially. But then the other thing to note is that we steepened considerably there as well. So steepening is often a sign of like the yield curve will steepen out when we're going into a recession. But I don't think that that's what's happening here. I think it's just also that, you know, when treasuries move up and yields come down, you also will often see the spread go up. Okay. What about the other ones? Well, the S&P 500 up in the upper right is doing a similar-ish thing. Curiously enough, there is not a whole lot of autocorrelation in the S&P 500. Wow, I've never seen it do a parabola like that in R squared. That's interesting. But it's basically saying you're not getting any kind of a trend. There's no autocorrelation in the S&P 500 at all, which is just consolidation. And then you got oil over here. Well, oil, you shouldn't expect oil to move on the news, even though everything else is moving. But oil did move up a little bit to test the 81 handle and then is on the sell right now. And then we got to come over here. The dollar, which kind of seems to be the most key instrument today. And you can see it bouncing off of that -2 sigma based on implied volatility and consolidating. So now we're going to get the S&P 500 open. And we'll see where they go with that. The problem is that most people do not understand risk. Well, yeah, I mean, I don't think that you really understand risk until you've taken risks, do you? Well, you've taken risks and failed a bunch of times and then have one work out. Socialists will ban trading. Yeah. Well, I mean, that's what happens in socialism. Were you long in Z? No. I did at one point. So I tried to take a trade. I think it was around 11. I tried to go short. And I was like 400 in line and got missed. That was a sim trade. I think that's too volatile for me to want to trade. But I tried trading it back to the 02. That would have been a good trade. So I feel kind of good about that. But no, if anything, I said, man, I really want to just buy the micro yield futures because I'm so scared of this number. So pleasantly surprised, but I don't think that I called this number before the number on this one. I tend to be okay at making those calls, but I think that when it comes to the really big anticipated numbers, those are usually a crapshoot. Hard to predict those ones. That's why they're so anticipated, right? Socialists will ban trading, yeah. They don't like the free market, right? Because the whole issue, the whole kind of origin of socialism is the free market will determine a price for something, and then the socialists don't like that price. That's what it's all about. Literally, the origin of all socialist thought is, I don't like this price. So, when socialists get in charge, they get rid of markets, yes. Until the Chinese, in which point they realize that, oh yeah, we need to have free markets. So now you get this bizarre situation with the Chinese economy where you have a communist party running a capitalist economic system. It's weird. So one of the things pay attention to in politics is that ideologies cross different sections of the political, right? Like socialism is an economic system, but there's also the foreign policy and social legs of things too, right? Well, socialism kind of has a social policy too. Whereas when you go back and you think about fascism is a social policy first and doesn't really have a coherent economic strategy. If anything, their economic strategy, I would say, is closer to socialism. But it's kind of incidental to what they are, right? Socialism is primarily about economics, right? It comes because they don't like the prices of things. So it's inevitable that socialists come in and will try and manipulate the markets, try and say, you know, put caps on things. Oh, you're not allowed to make the price of this go above this and all of that sort of thing. And then when that doesn't work, they just ban the market altogether. So remember that. Remember, that's the progression of it, because you're already seeing it happen in the United States, in some sectors, right? So that's what's going to happen with housing in New York. They've already been putting caps on rents and things like that for quite some time now, by the way. And what has happened? Prices have gone up. Not only have prices gone up, they've gone up a lot. There was a big thing. Well, I don't know if it was a big thing, but the CEO of Airbnb was like kind of put an open message to Mondami in New York and saying, well, since you banned Airbnbs from New York, the cost of hotels have gone up 8% in 2 years. It's a lot. Less supply. Price goes up. Yeah, exactly. So when that doesn't work, you know what's going to happen? They're going to start tearing the market apart. They're going to start taking the property away from people. They're going to start saying, oh, you can't just sell a house. You have to go through this special process that we have for it now, and all of that sort of thing, right? The market doesn't do what they want to do, so then they try and exert control. This is why socialism kind of goes down the road that it does. And the issue is it takes a little bit of time for that process to play out. Like, you will go and see these people. I tell you what, the pro Mondami astroturfing out there is real right now, man. Holy crap. There's a lot of that, right? And they're like, he balanced the budget by basically pushing debt out more and borrowing money from New York State and claiming that they balanced the budget. Oh, see, like everything that he's doing is being successful. It's been 6 months. It's been 6 months, and we're talking about things that kind of take like 5 years to play out. Give it a little bit of time. Like, give it just 1 year and see. Our rents down in New York? They won't be. And then the question is, by the time that the damage is undeniable, will you be able to dig yourself out of the hole? Because most countries, they don't. Luckily, though, it won't be all of the United States. It'll just be certain municipalities. So they can always potentially recover later. But Bitcoin will save us? No, don't start. Don't start with me. Is 1 gigabyte internet overkill for trading? That it doesn't matter. I can prove why I don't want it, but I can. Latency is what matters. You could have really low internet capabilities with super low latency, and that is what matters. I mean, people in New York spent millions for 1/10 of a second lower latency. Yeah, another note, you can have 1 gigabyte download speed. What in the world has 1 gigabyte upload speed? YouTube, Netflix, trading? Well, good question. Let's see here. I am uploading 1525 KB. $5K is equal to 0.005 gigabyte. Oh no, that's kilobytes. I think we want kilobit, right? Where's the line when it becomes overkill? Trading alone, 100 megabyte? No. Well, actually, this is I'm not sure the numbers. Let's see if I can show. Okay, so with me streaming and kept pulling quite a bit of market data, I'm not going over 10 megabyte. So I'm not even using a tenth of the pipe. Well, the tenth of your pipe. My pipe is actually 10 gigabyte. So it's pretty tiny. Yeah. So the reason that we got the numbers so high, like why is the bandwidth so high if you don't use it? Well, it's for streaming services, right? When 3 people at a time are all trying to stream Netflix at high quality, then you bump up into that limit. Okay. I saw your question next, by the way. The other thing though is that bandwidth and latency tend to go hand in hand, right? Like I do the 10 gigabyte fiber optic connection, not because it gives me 10 gigabytes, but because it improves my latency so much. So. Okay, would your strategies be based on order flow / volume footprints? May I ask what's your average duration of a trade? So I like to be in a trade for as long as I can. I will close it before I end the stream. I'm not going to swing it all day, but you know, something that's like 30 minutes to 2 hours. The longer you're in something, the more you can make. So I kind of scalp swing. But would your strategies be based on order flow volume footprints? No. So the volume footprint is an interesting tool, and I find it really useful to understand what happened after the fact. But I have yet to find any kind of empirically proven thing really helps. Okay. So what I do is what we've taken to recently calling flow factors. So what that is, you know, if I come in and I think there's resistance somewhere, this is a video that I made yesterday. If I think there's resistance somewhere and I go short, okay, well, the problem is that Tony over at Goldman Sachs, he needs to buy. So he doesn't care what your signal says. He's going to buy right through that. The only way to win is to know what Tony is going to do before he does it. So what we need is a framework that can kind of predict what Tony's going to do. Well, Tony has a bunch of different clients. Okay, and each one of those clients is something that or category of clients, I guess, you could consider a flow factor. So for instance, today there was a CPI. There's lots of people placing orders into the market based on that CPI and how that changed their expectation. Okay, so that's going to be one flow. There's going to be other flows that are trading based on how we're performing on volatility relative to implied volatility. Okay. There's going to be some that are flows that are going to come in based on gamma, because that's like the market maker, right? Market maker that's making options, he has to hedge his gamma. So there's a certain flow. There's a certain number of orders. When we say flow, we're talking about orders, right? There's a certain number of orders that come in, and what are the factors that influence those orders, right? And the reason that we need to take this kind of approach is because you can't just come in and look at one signal and say, yeah, it's going to go up or down. That doesn't predict anything, right? There's lots of different things that are going on, and we need a framework that is able to consider all of those different factors. So we can take all of the flow factors, kind of add them together, and that's keeping in mind that there can be correlations between them. There can be, some bring more volume than others, so you kind of have to account for those things. And there is a quantitative way to do this, but I find that you can do it in your mind pretty well as a retail trader, and then predict which way the orders are going to be that day. And then from there, you're using things like the DOM and like our volatility levels and so forth to kind of make more tactical entries once you know what the flow is supposed to be that day. I'm sitting watching it. I'm expecting a certain flow. If I'm already expecting that flow, then I don't need to see very much of it to feel confident getting in. Which is essentially exactly what I was doing with the trade that I missed today. So I was looking at, in this situation, the dollar and what volatility was pricing for the dollar is going to be the thing that's going to predict the extent that it's going to go. So I waited for the dollar to come there. And once I started to see some of the volume start coming in, like the backwash coming in the other way, I tried to go short. I didn't get filled, but it was a good trade, and it went back to the O2. And I did that by combining all of the factors. I know that the most of the flow for the CPI is done, and now you're going to get counterflows because of the gamma. So the other interesting thing about it is that when you're looking at flow factors, you can also look at timing, so you know when different flows are going to come through. So that's what I call it, flow factors. It's going to be a thing. It's going to become just as popular as fair value gaps, except for that there's actually some science behind it, so it won't go away like fair value gaps are. Wait. A 4K Netflix stream at 60 frames per second gets a near maximum of 50 megabits per second. So a 1 gigabyte plan means you can run 20 4K streams? No way. 20? So then I guess I don't know if I've ever heard 1 gigabyte is like your typical fiber optic, right? Most people that are on cable and DSL, it's like what, 200? So that's then where you can get to 5 people. I don't know how common is a 1 gigabyte? Well, let's come and look. Now I'm afraid I have to use an incognito window. Okay, new private window. Comcast. That's what it is in my area. Xfinity. That's what I should have looked at. Xfinity. 84014. Sure. That's not my address, but it's the same city. Internet. 300. What? $70 for a gig? What? It's too much. I think I pay 50 plus 40. So for $20 more, nah, I'd have to go look it up. It can't be that good. Anyways, I get fiber optic. 300 megabytes per second. What's your ping with Chicago? Oh, decent. You know what? I've done this before. I don't remember how to do it. Isn't there a way to like test your ping? Let's see here. I think it's hallucinating something. Hopefully they have ping turned on. The problem is that they often don't respond to pings. Because people can do DOS attacks with that. Okay. 33 milliseconds. Wow, you got 1 millisecond? That's amazing, AFall. I remember back in the day getting ping to a Chicago server, maybe not necessarily the markets, but like, let's say in a game, to get 100, 150 was good. Now we get 33. You know, what's really wild to me is that the internet connections have become so fast. You would think that ping shouldn't be an issue anymore, but in video games, it absolutely still is. Let's see here. What's Nick say? Answered that genuinely like a professor. Professor, what an understanding breakdown. I need to screen record that. Well, I'm here every day, so you could just come back tomorrow and while you ask the same question and I answer it again. You asked the question that basically is like the primary thing we talk about right now. Oh, by the way, getting a little bit of a move up here in the treasury. Not sure what to think about that. Is that just gonna fizzle out? While nothing else is moving except for the treasury there. Well, maybe oil. Oil is kind of pressuring the downside. Oh, no, it's fine. This is delayed by maybe like 5 seconds. So the other funny thing on the networking side is like I have 10 gigabyte primarily for the better latency, but I don't think that I actually get 10 gigabyte bandwidth because the routers and stuff that I have downstairs don't support it. Does this one support it? I don't remember if this switch is 10 gigabyte or not. I think it might be because I can't tell. I thought that it had the little fiber optic, you know, faster Ethernet port. But I'm pretty sure that the modem and the router aren't. Each gigabyte doesn't. No. But for some reason it does. For some reason, the way that my service provider does it, you do get better latency. I actually used to, before I moved to 10G, I don't know, man. I'm trying to remember. Am I just imagining things? Because I remember I definitely remember with my family running into situations where like every member of the family was streaming something and you were getting buffering. But I don't remember. I don't know if that was on the fiber optic, I guess. Now, how many millions of people pay for a higher package and then have the default stock crap from the company, which isn't capable of connecting to more than... Well, I don't have the default stock crap. I have good networking I have the router downstairs that does Duma OS and all that stuff. And it's a good separate modem, and it's a good one. But there's definitely, when you buy cable and you get the combined cable router thing, and those are terrible. Oh, those are terrible. And I do think, it's been... I got that router well before COVID, I think. So I want to say that router is almost 7 or 8 years old. Like, it's getting time where maybe I would want to replace it. Need to go and get a Unify router down there. What I really want to do is get a Unify router downstairs and have the wireless up here, right here. They have those ones that are like circular or whatever. I can plug it out of this switch. So I have a Unify switch that I bought secondhand. It's time to upgrade to Wi-Fi 7. No. It was funny is I was looking at that the other day and I was like, oh, where are the base routers? They didn't sell them anymore. So I guess I need to go secondhand for those. Because I don't have any Wi-Fi 7 devices. Come on. I do? No. My phone is definitely not a Wi-Fi 7. I need to get a new phone. Ooh, Samsung. Unless all your phones are old junk. Yeah, they're all old junk. I have a Galaxy S21 Plus. What year was that released? January 14th, 2021. You know what, though? I think Samsung is doing the thing where they like intentionally slow down your phone. You know what I'm talking about? Because I get this thing where like for the first few seconds after you open it up, it seems awfully slow. Didn't always do that. Getting time for a new one. But they're announcing new phones like, I want to say next week, but it might be further than next week. No, I think it's next week. A Wi-Fi 7. I'm not. Is it really the new base? I don't. Okay, because here's the thing that bothers me about those is that these new technologies usually rely on the multi-input, multi-output technology. I don't know. And then again, it's like all the things that you're saying. Like I don't come anywhere close to using all the bandwidth from a current wireless. And won't Wi-Fi 7 just be like even worse at going through walls and stuff? But that's why I need to move the Wi-Fi up here. Oh, you get when you get us on internet, we talk too long, right? Yeah, instead of your phone connecting to one antenna at a time, we mastered it. We talked to all antenna at the same time. Yeah, but that doesn't come without disadvantages, right? Isn't that going to mean? Isn't that going to mean more collisions with other networks in the area and Wi-Fi that doesn't go through walls as well? Maybe. And then you kind of have to wonder, well, what is the driver behind developing this new standard and pushing everybody to go over to it? If nobody was coming out anywhere even close to using Wi-Fi 6, right? Well, maybe it's so that they can spy on you, right? Because they've found that they can like see behind walls and everything by looking at the Wi-Fi. You can use the Wi-Fi to see through walls and stuff. So maybe they needed to change things up a little bit for that to be better resolution. Maybe that's why they're doing it. It's doing me great. Through my house and into my suburban park, away from my house a bit when I upgraded one. Didn't, so I won't argue ups and downs of the tech, but it's better for you. And all of my computers are wired. All of my computers are wired. Kind of thinking, I've been, that really gets me thinking. Well, what were we talking about before this? We were talking about flow factors. I need to make more videos about flow factors. What do you think? First I was just calling it factor, but then Fable said I should call it flow factors. We're calling it flow factors, and I'm really into that thinking. I think that's a really good way to put it. I made a video yesterday about it. I don't know if that really took off. Probably I'll do another video later in the week about that same subject. But anyways, I have 2 computers set up in the family room over there because I wanted the boys to be able to play Minecraft on those computers. And what I am finding is that they don't play Minecraft with them. He just watches YouTube on them. And my 7-year-old autistic son is really weird about, like, I want your phone or I want to use the computer, because he has some idea in his head about that one is the better, when it's really not. Really, the best way to watch YouTube is on your tablet, bro. So he uses that computer every day. I don't know if I can move it back downstairs, but I kind of do want to move it downstairs because I got a rower and I've been rowing and I want to put the rower in the corner. I want to put the rower in the corner. I've enjoyed the rower. I rode on Sunday and I rode yesterday, and it's made a difference. My love handles are going down. I bet you after a month of that I might get rid of the love handles. So after the market opened 6 p.m. Eastern time, I combined NQ 32 ticks to 1 and played 1 tick game like it's ZN. What do you think? So are you saying you're using tick aggregation slash what is it called, multiplier, and you made the multiplier 32, and then you were really taking 32 ticks? I don't know if setting it to 32 necessarily helps you, right? Like 32 is so fast. You would definitely, well, let's try it. Let's go and go through the practical stuff. Do I spy an actual trader here? No, we're just LARPing today. Just LARPing today, unfortunately. I thought I had a good, I was going to have a good opportunity and I was going to take some trades in the micro treasury yield futures, but it just didn't happen. So I guess that means today I was a LARPer. What are we looking for? Depth and cells, right? NQ. Definitely don't want to put the account on that. Okay. Oh, September. Okay. So, good grief. Good grief. But, open it up with the default settings and it already is giving me a headache. So I'm going to turn off, we'll leave the order column on, but we don't need the snap. No, it's just, is it the, bid profile you don't need. And these you don't need. There you go. I also don't need the LTQ column. Okay. So now, we want our market depth way more than that. Let's say 64. Okay. And we make it the full height of the screen. So it moves so fast and it resets so fast, right? Wait, what is? Don't worry about it. But where did? The wrong thing. Which is, when do we recenter? Auto center ticks. 32. Okay. So when you do it with the default settings, it's still too crazy, I think. I know there are people that trade it like that, but to me, that is just too crazy. So we come in here. I hate that they changed the icons, but then I can't the settings one to show up. I'm just going to leave it like that. Okay. Oh, actually, that's not one that we want. We want that. Okay. So we changed the tick multiplier to 4. Okay. Like that. That seems pretty manageable to me. So if you were doing 32 ticks, that's 8, right? From 10 to 8. Yeah, reasonable. Reasonable. The issue with doing the tick aggregation is I forget how it decides which one it puts your order at. I think that if it's like, if you put it on the bid, then it's on the lower, and if you put it on the offer, it's on the higher, but whatever. You put it on at 10, you'll nearly vomit. Yeah. it's really a custom. You notice, by the way, I have 64, and like how far out can you see? It's probably not enough. Oh, is Goldman Sachs doing earnings today? Why are they up so much? Jamie Dimon says AI has helped JP Morgan cut 40% of jobs in certain roles. Yep, they have. Usually zero hedge. It's a synopsis. Iran launches brazen attacks on more tankers in Hormuz, killing sailors after Aragachi mocked Trump's toll plan. Yeah, you want to die, Aragachi? Because that's how you get assassinated. IBM crashes most since 1987 as customers abruptly shift CapEx spending. Ouch. So that's not just, hey, we think AI is going to affect this company. That's something showing up in earnings. It's no good. I think there should be some displacement, so you should be seeing gains in other places. But I don't know. Why, when I searched CNBC, did it not just go to... Oh, that's so fucking... Wow, they're up 7%. That means that I made like $1,000 or something. Pull it up. Might as well pull it up. I don't know. Maybe 4 is too much. Maybe 8. I kind of feel like that doing it on 32 would be kind of a little like you'd be missing a lot, but I don't know. Maybe it doesn't matter. Did I resize it back down again? Even at 16, it moves a lot. I don't know. Who was it? Was Vital, wasn't it? Yeah, it was Vital. Okay. Maybe you are onto something. Make it 32. Did it not take? Okay. And then you just play it for ticks? Eh. We'll have to make a few changes here. This really needs to be like 256. Right? Oh, I can't go higher than 100? Well, okay. Show depth history will help a little bit there. Maybe. Then go to my big. Is it big? No, it's not big. Ugh. Okay. Uh-oh. Okay. There you go. Show depth history, appearance, 16. For some reason, Aqua Snap is not on, so it's not letting me snap. Or maybe it's on, but settings just not right. Maybe Jigsaw's windows just don't snap anymore. Yeah, maybe. I could certainly try it for funsies if you guys want. Man, I tell you what, like ignore the numbers and everything because includes like IRAs and stuff like that. But like the amount that the market has grown this year since things kind of chilled out with the whole Iran thing is wild. It really moved. It's like $10,000 in my retirement account. I don't actually have $40,000 available to me though. Okay, this is the one that matters. We started this account basically started with COVID money for the most part. COVID money and the shares gifted to me from Goldman. Made 12,000 over the life of that. Half of it is from Goldman, which I have a 6-bagger on. Woohoo. But today, oh, I thought it was 1,000. It's $500. 500 gain today. I've lost $60 on my TLT position. And AG is profitable, so that's cool. Keep that. I need to switch this out for a tech company. I don't know who it should be. Berkshire Hathaway has been pretty okay too. Interesting. Oh, actually, you know what we got to do is we got to come in and do and will it let me see performance of just that? Just the individual account. But no. I thought we were all done with the Bitcoin thing. There's still people out there that are like, yeah, you got to get on the Bitcoin. Bitcoin has gone up so much. Yeah, I think there'll probably be some gains in the future, but I don't think that that's going to be the best gain. There's going to be other things that are going to make more, right? Like you made more money from being in NVIDIA, for instance. What's the next 5 years going to be? Who knows? Man, it doesn't really... The tool is not as good. It used to give me a fun chart that would show me how I performed versus... This is in their new experience, that's why. Maybe I just need to go to the old experience. Balances, if not invested for the income. No. Even on the old one, it doesn't let me see how I performed versus the market. I want to see how I performed versus the market because I'm pretty sure that I outperformed the index, especially with that Goldman jump. But oh well. Apparently, Fidelity doesn't want its users to be able to see how they're
Block sell.
performing relative to the market anymore. Ooh, they got sold there hard, huh? 3K at 31.5. 5K total. We're gonna replace ES with NQ here. We're gonna try and scalp it. Show me Bitcoin flows. Okay, so this is exactly why I don't like to trade Bitcoin, because what are consistent flows that happen in the Bitcoin market? There really aren't very many, right? So for those of you that weren't here earlier, we're talking about flow factors, which is to say, what really matters is the big players, are they going to buy or sell today, right? And all that matters is predicting what they're going to do. So we need to look at things that will predict what they're going to do, and those are flow factors. So some flow factors can be seasonality, what's going on that day. So the fact that it's a CPI today, that's a really, really big factor, right? One of the things that I really like is that treasuries on the first day of the month tend to be up, because that is when dealers buy their inventory. So that's a flow factor. They buy inventory the first day of the month, right? Those guys, they have to do that to be able to sell to their customers, essentially. Like, that's their business, right? So what kind of flows like that exist in Bitcoin? Well, basically, there are the miners, and that's it. The miners are the only ones that really have to buy Bitcoin. And because they changed it so that it can't really be used as a medium of exchange, that kind of limited the number of people that can actually do that. So you get people that are the exchange, or sorry, I guess you could include the exchanges though. You've got the miners, the exchanges, and these ETFs. And that's basically the whole Bitcoin market. So does that give you a lot of flows to predict what Bitcoin is going to do in like the next hour? No, it doesn't. Right? On the opposite end of the scale, you have NQ, where the number of flow factors that affect the flows over there are so numerous you couldn't possibly ever hope to count them all or understand it. Can you find an edge in NQ? I don't know. Remains to be seen. Sure seems to me like a lot of people just come in and take degenerate risks and do really well with it, right? Sure seems like he could do it. 32 ticks. Does simplify it a little bit. A-ball, he's trying to make money, not lose it. But what if Bitcoin is currently at its support level and just goes to the moon from here? Then maybe you get a 50% gain. Let's see. Don't you understand? Bitcoin is already on the moon. Bitcoin is already on the moon, and now you're just talking about, like, let's get to the edge of this crater. Like, this is the problem. Most of the people that are in Bitcoin, they're doing it because they think that Bitcoin is going to make them rich. But once they realize that the upside is limited now, they're less interested. They're going to go into something more speculative where they can really, really make 10 times their money or something like that. And that's going to be more certain stocks, options, things like that. Not Bitcoin. And that's why after the ETFs came out and everybody put money into it for the ETFs, and that kind of made things rise. And then ever since then, it's just been stagnant. Because there's not anything to draw anybody in anymore. Now imagine it's like ZN on the move. Yeah, well, suffer that I have yet to see it come into like a liquidity hole and just stay there, for instance. But if we do get that, if we do get a really strong liquidity hole sort of thing going on in NQ, you might have an easier time of grabbing the tick than on the treasury, right? I'm closing all of my, like, you know, unnecessary tabs, and I'm going back to when we were searching for what would be the female Seth. Selena. It would totally be Selena. Yes, we need to go and find somebody named Selena to take over the stream for me. Warsh is speaking right now. Inflation is a choice. Oh, it sounds a little hawkish to me. We want economic growth to be more broad-based. Ooh, yes, thank you. That's what I want too, Mr. Warsh, but how are we going to accomplish that? Please narrate what you are trying to do with NQ. I am not looking at it at all. Okay. Let's do this. Let's do this. We can come in. Okay. That's good. And we're trying to take one tick, right? So then what I'm watching for is an area where I think that the volatility is going to contract. I'm kind of tempted to try and bump it up to 64. Like, I want there to be 100, at least 100 contracts, you know? Okay, so right there was a little bit going between 72 and 80. And then we came down 2 ticks, so... And then back into it, so I think that this is a node. Come on. There we go. And we got the win. That was 32 ticks. Is that 32 ticks? Wait, where's the... $160. Wait, is that right? That was 160 for 32 ticks? Now, interestingly enough, it moved on me there. Auto center ticks needs to be like 64. Okay. So now I didn't put the stop down. It never came into play. But look at that. MFE 31, MAE 4. Huh? That was pretty good. If we can just do that every time, then I'm going to be a god. This is not necessarily the best place to be doing. Like, sorry, I think liquidity wise it seems okay, but timing it's maybe not very good because of Warsh, right? Okay, a little rush of volume there. Ooh, lots of pushback on it. So is the spoos gonna start selling here? They're kind of starting to develop a little bit of a downtrend. And there's definitely some volume selling it. Southwood destroy prop firms with one contract? Well, if we did 4 contracts there, that would have been $1,000. Would have been good. No, I don't think we want to be $1,000, but we could have done 2 contracts. I think 2 contracts. So it would be like 2 contracts. We lose twice. You're right at the limit. I don't know. Things don't quite line up exactly the way that I would like in that. Maybe I should just do 1. That means I'd have to do that like 10 more times today to make $1,000. Because these big swingers that everybody's watching, because they're making so much money supposedly, they're doing 1,000, right? Maybe I'm dead wrong. They're on the upswing there. Kinda coming back up on the regular session open there. Yeah, you need room for a loss. And like 2 tick loss there is too much. So probably what I have to do here, I like literally never use this. Where's the strategy bit? Strategy manager. I haven't even created any strategies on this one. Okay, new strategy ID 32, right? Quantity 1, stop ticks 32. Stop, yeah, we can just do stop. Target ticks 32. OCO. Okay. So in the treasuries, when I'm doing this sort of a thing, you know, I would prefer to use a stop volume and I kind of mess with it. But in this one, I think that we really could just like 1 click, see which side it goes to. Should be fast. I'm pretty sure that Vital's just giddy that I'm trading NQ. Huh. Yeah, I know you. I know what you're really trying to do here. would have been a good one at 28 there. I'd say the uptrend looks pretty okay. Uh-oh, Trump is talking. Oh, he touts a deal on True Social. Never mind. So we're safe. Whew. I need to go to Facebook and update my Facebook. Marked safe from Trump tweets. 2026. Or marked safe from Trump tweet-driven market moves.
Block buy.
Ooh, look at that go. Warsh says... No, that can't be the headline. Warsh says tax forces are in discovery mode. I do not know what that's about. Look at that huge note at 03 in the treasury. That's a little confusing. So Warsh was speaking and saying that they're still in discovery mode. Trump speaking. Neither of those things seem to explain that big of a jump up. Can you imagine if you'd caught that one, though? Woo! Would have been fun. Kind of wanted them to go back to 72, though. I thought that was a more fun area. Oil took a dive there, too. Trump touts U.S. economy and oil prices in a midterm pitch in Pennsylvania. He's just retweeting articles. Huh. Liquidity is upside. Yeah, see, I kind of want to wait for them to, like... You don't want to get in when everybody else is getting in, right? Oh, I screwed up there. There we go. I think I was wrong about that area anyways. There we go. Oh, geez. I don't know if I can do this. This is a little nerve-wracking. Because you'll see it trading that, but not necessarily it get high enough to fill you. Okay, it filled, though. And this one I took, well, it took $30 loss, but it doesn't count. I made 320. I made 320 today. How much time do we have left, by the way? 20 minutes. Oh, and I totally forgot about Claude over here. Is Claude asking us anything? He is. He wants to build the project. Well, if you must. I don't think that was going to fill. If I had done it at the 792, maybe it would have worked. A little bit too much selling here, and I don't think it was a good one. On ZN, you would market, buy, sell. So I depends on what I'm doing, but I very much prefer to use a market order to enter a position. Actually, like I want to be, I think I know which way it's going. I want to contribute to it going that way, so I'll use the market order. No fill. Unfortunate, that one would have worked. Now, the thing is, we could be doing this on single stock futures. That might make sense. Because I definitely want to get into, okay, we know what they all are. The ones that offer micros, at least. And I'm keeping up on the news headlines for all of those individual companies, like a hawk. And I'm also tracking the flows in those on things like buyback windows and when the employees can sell and all of these sorts of things, right? To track the flows. And then I can use all of that together with some other kind of technical things to decide which one to trade that day. And then you can come in and do this sort of thing on that. And if you're doing that on an instrument that is set up to trend that day, then it should work pretty well. The question is, after you do that 100 times, do you really, you'd have to have a high win rate? That we basically got it 2 times in a row and had 2 missed opportunities that were pretty good as maybe just luck. Well, the treasury is normalized back to where they were. S&P has fallen a little bit, but nothing too crazy. It still seems tilted to the upside. Set a hotkey for buying. What's it got? How can you avoid getting caught by news while scalping? Well, for one thing, you kind of need to be following the news and knowing what's likely to come, right? So, for instance, the big conflict right now is the Strait of Hormuz, right? So we got to be weary about taking a position when Trump might come out and tweet something about it, right? It's not going to completely prevent it from happening. You don't want that. You don't want to be in a position like that. You don't want it to happen to you, but you can't completely avoid it, right? But we can minimize it by knowing what's going on. and possibly even have ourselves positioned in a way like you kind of have to ask yourself right now, if Donald Trump were to say something significant on the Strait of Hormuz, would it be more likely to be hawkish or dovish? Like, would it be more likely to be expanding the war or de-escalating the war? So you can take your position in accordance with that, so that if it does go, you know, you're positioned the right way. I was scalping ZB, but a news candle blew my entire candle. Well, was it CPI? Because if it's CPI, you should know that CPI is about to happen. Right. The economic reports, like if you go to forexfactory.com and the economic reports that are on there, you should know every single one that's going to happen that day. It's a pretty big sell at 0.5. So it looks like the S&P 500 has come back to the regular session open price. Right there looks okay. It's maybe a little bit late. Oh, okay. Nope. Too much momentum on the downside there. I'm going to try it again. Nope. Two bad ones in a row. Probably you just need to let it, I was a little too early. Or maybe there's just nothing to it, right? I am just kind of winging it. Oh man, now it's kind of showing me again. It's like, yeah, Seth, you could have done it. Could have gotten away with it. I love how it's like you're 5 in line, but it might not actually be touching you. We need to, on our platform, when we do tick aggregation, we should do things to kind of help us know what price it actually is. Like, what if this center column said what the actual price was? Come on. Yes. I want to say that those two bad ones shouldn't count, but they totally count. They totally count. I'm not liking that. Cool. Ooh, that one was... Okay, so for interestingly enough, Jigsaw is not reporting the MFE correctly, right? Because we ultimately did get 32 ticks, right? Woohoo. Second one is kind of don't go down the same. Yeah. Well, so what I was kind of looking at, though, was that there was some absorption in this kind of area, and I had kind of, or, you know, this had been an area with contracting volatility earlier. So when we come back there, you know, I think I'm still tilted positive, so I want to buy, but I should be able to get it out there. Right. In that case, you know, they came back to it. I actually was correct. Like, that area basically did exactly what I wanted it to. It was just like way too early. So I was thinking like, oh, okay, it didn't work, but like, let's just wait. I see it do it again. I'll take it. I was still too early. So I think it counts, but we learned a little bit there, right? I'm going to wait a little bit longer next time. Gonna wait a little bit longer next time. But this is all super, super iffy. Like if you take that one out, and then you look at the performance of it overall, it's like 1, 2, 3, 4, and then 1 loss. That's pretty good. Especially when you're getting like equal risk reward and stuff. But then I started thinking about like the MAE, MFE. So the first one was great. First one was perfect. But some of these other ones, you know, I'm getting enough MAE. Like, I would ideally not like to keep the MAE below 16. And it's not. So that kind of stuff right there kind of suggests to me, you know, you're just getting lucky. But I don't know, we could practice it for a week and see how we do. If I was able to do a week and come out profitable in the end, even if it was tiny bit profitable, I'd be pretty happy with that. That's about the amount of edge that I would expect I'd be able to get doing this. The issue is kind of like, there might be some situations where I really think that the S&P 500 is trending, and then you would want to hold it longer than that. And those two things kind of conflict with each other, right? Why is the NQ so thick right now is just my DOM. I am using tick aggregation. I am combining 32 ticks into one price so that I can see better. Because Vital gave us the idea, and I was like, well, I'll just show you what it is. And I was kind of like trying to show like, well, this might be the problems with it. But the more that I thought about it, the more that I was like, nah, actually, maybe this could totally work. Or at least I think that it would be just as, like in ZN, we'll do this thing where you try and get a one ticker. Like, you know that you can get filled here and then see if you can get filled on the other side. Well, it's often hard to get filled on the other side. So could you do it over in NQ? And then you're more likely to get fills. Huh, I don't... Oh, okay. So in Jigsaw... Come on. In Jigsaw Day Trader, when you're looking at your instrument, there is a setting called tick multiplier. And I have tick multiplier to 32. So what that means is each level on the ladder, each step on the ladder is actually 32 ticks instead of what is usually one tick. Right? Over here in the 10-year treasury, right? That's the minimum price fluctuation right there. So you can see here, like 29,760, and then the next price is 29,768. So it's 8 times 4 is 32. Because there's 4, you know, it goes a quarter, a half, 3/4, full, right? per handle. There's 4 ticks per handle. It's 8 handles, 32. Tick compression, maybe we could call it. Okay, wouldn't that give you unrealistic fills and not count for the slippage? So Jigsaw's simulator simulates your spot in the line really well. And you're still putting it at a specific price in there. So I guess maybe we could go back and verify it, but it does pretty good job at. In fact, it's actually the fills that you're going to get in Jigsaw are going to be more stingy than the real market would be. But we could verify that does tick what I call tick aggregation. I think tick aggregation is the most accurate term. They call it tick multiplier. What did you call it? Tick compression. APOL called it tick compression. That could make work. We could make that work too. Tick compression. Does tick compression change how the Jigsaw sim works? No reason to think that it does, but still something to verify. I think I would need to have both thumbs up at the same time or something. Do that. It'd need to be more than that. It would need I would want both thumbs up, and then when I put an order in one, do I see it in the other? But I'm saying there's no... Oh, no, you could totally use that line. Totally use that line. And even place orders on it live. I do kind of feel like if I'm placing live orders that I would rather have it be the most granular, but not really. I mean, the tick multiplier thing was something that I always... Before it was a feature in Jigsaw, it was something I asked them for. Why? Because in stocks, you really, really need it. Stocks, you really, really need it. And I remember watching the traders at the bank, and they could change it with a scroll wheel. Like you'd hold shift and scroll, and it would change the multiplier. And then it once you pause for 5 or 10 seconds, then it would change it. So that they could move between higher level and close level really quickly. Kind of cool, huh? Fortunately, then Jigsaw, they're like, that doesn't make any sense. We're not going to do that. Okay, but Ready Plus does it. Anyways, I had a thought about it. You can add delta, etc. to them. You could. Although I honestly don't know if having delta on the DOM would have that much value. I see it better on a chart. I don't know how. Well, so the way that it works is if I put a bid at 29,768, my order is sitting there at 29,768. And you might see trades into it that are actually trades at 29,769. And it won't give you a fill then. It only gives you a fill when it goes through. Because it is simulating the order queue. Right. So when it comes to where I place orders, I have to put them at those particular numbers, which might, what if I wanted to put it at 29,770, for instance? I can't. in 1 month with the video title live NQ trading. I know. Well, like if I did this every day and I actually got these kinds of results, or like let's take out that one bad one, I think again, it counts. But if we're looking at how does this actually perform, you can maybe take that one out and say maybe once we get it figured out, you could take that one out. So if I get 4 winners and 1 loser a day and I just did that every day, and then maybe every once in a while you have the blown account or whatever, like people would totally watch that. Of course, I think that I understand enough about the market that I would know when you would get that blown account sort of issue and to avoid it. Because it's not changing what it physically happening or trading at all. All it's changing is what we are seeing, like an average. An average isn't exact, but it gives you an idea of what is going on. Yeah, we're aggregating the price levels into one by what is displayed, at least. Trump is saying oil's flowing like never before, and the market is reacting to that and moving up. And I don't want to participate on that one, although I am awfully tempted to buy at 08. Okay, Phil. It's not working. Stop. Yeah. See, when you get a trend like that, you can get the backwash, right? So you don't want to trade it in that situation unless you think you're really early and the trend is really going to carry you. Well, really what I want to do is get in a place where the volume has died down a little bit and I think that we're range bound, but I still have an idea of the larger trend. I wonder if I could use the Norden method like that. Maybe. Like the thing with the Norden method is that the advantage that you're trying to pull out is super, super tiny based on like a correlated instrument. So 32 ticks on NQ is way too much. CA, sorry, I wasn't looking at the price. Only showing every 8 points now. That kind of makes sense. Yes, now you get it. Now you get it. Okay, I'm sorry, guys. I got to get going. It was a good session. We had a couple new people in that asked some really good questions. So thank you, guys. So you guys coming in and asking the good questions is what really makes it a good stream or not. I need to think about what I'm going to make for TikTok today. So I did like my first set of content. I think now I'm supposed to like recycle it or something. But anyways, I'll figure something out, guys. I will see you tomorrow. We've got PPI, which could be really interesting. In the meantime, stay excellent, team.